Thank you everyone for joining our discussion today on central bank digital currencies and crypto, both very topical subjects this year. My name is Ashley Stanhope. I'm the Director of Communications for Ether Capital. For those of you who don't know us, we're a Canadian public company that provides direct investor access to the Ethereum and Web3 ecosystem. Just have a couple quick housekeeping items before we get started here. So I'm just going to share my screen and away we go. Okay. All right. The panel is going to be about 40 to 45 minutes, and then we're going to spend the remaining portion answering your questions. So if you do have any, please put them in the chat box and we'll try to get to as many as we possibly can. These are just some routine disclaimers. The views of everyone in this discussion are their own, and they should not be ascribed to any companies or organizations they currently represent or have previously worked for. And also, we're not here to provide any type of investment or financial advice, rather just have a more broad discussion about the space, crypto, central bank digital currencies, and regulation as well. So, and now I will stop sharing my screen if it will let me. Apologies. Okay, stop share. And with that, I'm gonna toss things over to our moderator, Michael Regan, who is the senior editor for Bloomberg.
Oh, thanks a lot, Ashley. Yeah, I'm a senior editor at Bloomberg. I've been a journalist for, almost 30 years now. Hard to believe, but about 15 of them at Bloomberg, covering financial markets as an editor and a columnist. Also host a podcast called What Goes Up, where we talk a lot about crypto. And one of the guests we had last year is none other than our host here at Ether Capital, Brian Mosoff, who's the CEO of Ether Capital. If you're unfamiliar, it's a Canadian public company that invests in Ethereum and Web3 technologies. Brian's been an active member of the crypto community for nearly a decade. He helped launch the world's first Bitcoin ETF alongside Purposed Investments, also a former advisor to the Ontario Securities Commission. And if I do say so myself, Brian, a pretty good podcast guest. We'll have to get you back on. And if anyone wants to hear Brian and I talk about NFTs, go back to What Goes Up from September. Really interesting episode. I don't think there are any central bank NFTs yet, though, but maybe that's coming. I don't know. But Brian, thanks for having us.
Thank you. Happy to be here. And, I'm excited to chat about kind of the intersection of crypto and CBDCs. It's a topic that we get asked all the time. So excited to be here with you. And of course, Carolyn Wilkins. So I'll turn it back to you, but excited for today.
Yeah, so let's meet Carolyn. Really excited to get to know Carolyn today. She is currently an external member of the Financial Policy Committee at the Bank of England. She was also a 20-year veteran of the Bank of Canada, including as senior deputy governor. She is on the board of directors at Intact Financial Corporation. But Caroline, to me, the most impressive bit on your resume is that you're a senior research scholar at Princeton University. And the reason that's impressive to me is I'm a Jersey guy myself, so I'm going to claim you as a New Jersey bragging rights, if that's okay.
That's no problem at all. I'm getting used to your highways as I drive between Philly and Princeton. So
yeah, they take a while to get used to. Some aggressive driving, that's for sure. But Caroline, let's start with you. I would love to just start sort of on the ground floor. And why don't you tell us a little bit about your career at the Bank of Canada, now the Bank of England, how you sort of segued into the notion of digital money and sort of some of the projects you worked on over the years in that realm.
Sure. Well, it's funny because I started off as a pretty plain vanilla economist at the Department of Finance doing economic forecasting and the kind of thing you would expect an economist to do there. And I moved over to the Bank of Canada, 21 years ago now. And it was really motivated by my interest in central banking. And I got into the financial area and I was in the trenches during the financial crisis. And so I got to see the throes of what's great about our financial system and what needs to be fixed. And when I saw the move of digitalization, not just because of crypto, but including crypto, I thought, hey, here's an opportunity to think about how to shake things up and hopefully make them safer and more efficient for consumers and businesses that rely on them. And an obvious place to start is for a central banker is, well, what about our own offering, which is banknotes, which is going the way of the dinosaur? Not done yet, but a pretty important service that we provide to Canadians, or the Bank of Canada provides to Canadians, and central banks do more generally for their people. And so it's really, is there a digital offering that a central bank can provide that would create a net benefit for society?
Yeah, and I'd love for you to sort of explain the difference between sort of a central bank digital currency and kind of what we're used to dealing with in the present tense right now. I mean, obviously, most of us get our paychecks from direct deposit. Our money is instantly sent over the internet to whoever we owe money to, and we make our payments with credit cards. So it kind of feels like money is digital already. What would distinguish a central bank digital currency from what we're basically used to now in the world of digital banking?
That's a really great question. A lot of people ask it, and in many ways, the financial system provides great service with respect to payments already, and so you have to ask, what's a digital currency produced by a central bank different? In my mind, the number one biggest difference is that it's a liability of the central bank and not of a private institution or a private protocol whose objective is profit. And legitimately, so that's what private companies do. And so when you think about providing an option for citizens that is, there's nothing safer, there's nothing that can be designed with more access and low transaction fees in mind than a central bank digital currency, you start to see perhaps a business case that could coexist alongside private offerings and be distributed in a way that was complementing private offerings rather than, strictly speaking, competing with them.
So Brian, let me bring you in here. And how do you sort of view a CBDC in terms of the perspective of a crypto professional like yourself? I mean, does this seem like a potential competitor or a complement to the crypto industry? How do you see it fit a CBDC fitting into the whole world of cryptocurrencies?
So we got this question asked a fair amount of the time by investment advisors or shareholders, wondering what does a CBDC mean for things like Bitcoin, for Ethereum? And I think that there is a world, for both of them to coexist. I think Carolyn shares that same view in our conversations. What excites me about crypto in particular, different than some type of CBDC, is the amount of innovation in what I call composability of these networks. So when you think about all the innovation that's taken place on something like Ethereum over the last couple of years, we hear a lot about DeFi, NFTs, the metaverse, stablecoins, which are tokenized dollars that live inside that world. It's really a bottom-up and self-composed system rather than one that's top-down. So it allows probably more flexibility for innovation to take place. Now, how that innovation can exist inside of a regulatory environment is something, of course, that's hot up for debate, and how that will go in the future. But what really excites me about crypto is how global it is. It's not just limited to private corporations in a specific jurisdiction. It's a very community effort. Now, of course, I think that CBDCs, there's tons of efficiency to be gained through things like what Carolyn's discussing. And so that may be a benefit to society, but I think it's important that we find ways that the two systems coexist and possibly leverage one another. Things like stablecoins right now are being issued by private corporations. Again, for anyone who's not familiar with that term, stablecoins are just tokenized forms of dollars or euros that live on these blockchains. And the question is, are they safe? Are they secure? Are they truly backed one-to-one? What type of transparency, is there into audit reserves and all that kind of stuff? And so I think there's a big role here and an opportunity for CBDCs to come out and play that role in this new ecosystem.
Well, Carolyn, let's talk about what Brian mentioned, the innovation sort of embedded in the notion of a CBDC. Now, obviously, when we think of crypto, the big innovations we think of are the blockchain and the distributed ledger. Is that sort of how a CBDC would work, do you think? It seems sort of almost like an oxymoron to think of a decentralized network run by a central bank. Does a CBDC need a blockchain, or can it be done without one?
Yeah, well, the simple answer is it can be done without one, and it would be a big surprise. I don't think it'll ever happen that an unpermissioned distributed ledger technology would be used for a central bank digital currency in its core functions. For really obvious reasons. The Bank of England and the Bank of Canada, along with the Monetary Authority of Singapore, when I was at the Bank of Canada, and I believe they're still doing it, we did a lot of experiments with different forms of distributed ledger technology, just to, well, kick the tires on it, see how it worked, and really understand it, but also see whether there was a business case for using it in some of our own operations. And it seemed to us that the efficiency gains really weren't that great, but partly because we weren't leveraging where I think the gains would be the greatest. And so if you've got a really efficient centralized system and there's a reason for centralization, it's kind of hard to beat. So in a large value transfer system, but on the other hand, if it were connected, so if there were an underlying layer that it was connected to that was distributed, then I could start to see some of the gains because they would be efficiencies in the back office. There would be the potential to link it to a smart contract. So if you think in the CBDC space, you could think about smart money or programmable money. That would be another layer that maybe the private sector would build on it, not necessarily the central bank. And so there you start to see how you can mix the technologies in a way that provide the security that central authorities are going to think they're going to need, but also linked to a decentralized world that properly safeguarded, properly regulated, but that could provide that efficiency. Cross-border payments are a great example of inefficiencies, and that's one area I had in mind.
Yeah. Brian had mentioned stable coins, and it feels like, at least in the US, a lot of the regulatory scrutiny and sort of legislative politician scrutiny is on stable coins, whether or not they really are backed one-to-one, and how do we sort of wrap our legislative framework, regulatory framework around a stable coin. Do stable coins sort of solve a lot of the same problems that a CBDC would hope to solve? Is there a potential that a stable coin could fill the same niches that a CBDC would like to fill if the regulation and everything is buttoned up the way it should be?
I think there's a case to be made that there's overlap in the functions that one could envisage a stable coin as providing. I think that a fundamental difference between the two, even if you think about the perfectly backed stable coin that was perfectly safe and a liability of the central bank in the form of a CBDC or reserves, you need a credible monetary policy function underneath it. And so there's a lot of studies out there that show that you can't have the private sector do that. The incentives aren't there to do it properly. And I know that, today, especially today with the inflation numbers out, thinking about maybe not stable coins, but other crypto assets like Bitcoin as being a hedge to inflation, I think that's misguided. We can talk about that if you want. So a CBDC and keeping, a unit of account that was a national currency and fiat is kind of core to efficient monetary policy and monetary sovereignty. But again, stable coins can build on top of that really strong foundation to provide other services. So I don't see them as competing in every area. But I realize that the discussion around that is pretty mixed.
Yeah.
But one of the, just to jump in on the stablecoin thing, though, I think one of the questions, this is where it's going to start to get interesting. One of the questions I think will be, if you have a central bank digital currency acting as the stablecoins in this cryptocurrency land, will it have the same flexibility and functionality as the privately issued stablecoins? And we haven't seen this happen yet, but I think it's one of the biggest questions that I wonder. Will you be able to take a stablecoin issued by the Fed or a stablecoin issued by Bank of Canada? Can I use that in DeFi, or will it be boxed into very permissioned versions of that software. And so that's where it also potentially breaks down, right? You just won't have the flexibility to move it into certain jurisdictions or certain applications. And that's what's going to be key to balancing, I think, to see the success of those dollars succeed in this new world.
Yeah, Brian, I wanted to ask you about that because I feel like, and I don't want to oversimplify things, but I feel like sort of the birth of crypto has a bit of a sort of anti-establishment instinct to it. And it's hard for me to picture real, the laser-eyed crypto enthusiasts of the world really embracing a CBDC when they have a privately issued stablecoin instead. Do you see sort of a tension there where the crypto industry would not welcome a CBDC, would not be happy about sort of that intrusion of a central bank into the space?
I mean, that's one of the things that I'm basically talking about here. But one thing that you have seen in the last, especially 2 years, is that tokenized US dollars, the biggest one being USDC, which is a flavor of this, has become one of the biggest quote currencies in DeFi. So rather than leaning on, let's say, wrapped Bitcoin or Ethereum as a trading pair, tokenized US dollars have become very heavily used and leaned on. So you're right in that the community may not want to tether itself so heavily to monetary policies issued by central authorities, but we are seeing that I think that there's an opportunity here for extending, I guess, the life of those currencies into this new world because they can become the quote currencies, and that's how they're being used today. You're seeing hundreds of billions of dollars in stablecoins exist on Ethereum and similar networks. And this number was just a few billion or even less than that 2 to 3 years ago. So there's definitely a demand there. And I think that there's always going to be a part of the community that has no interest in it and will say, forget it, we shouldn't be touching this stuff. But then there's another group of people who sees there is, as Carolyn's saying, there's stability that comes with some flavor of USD or other national currencies to exist in this world. Both will probably have their place, and the question will be who issues those tokenized dollars for the users that want to participate in them, those activities, and then what applications are appropriate for them to plug into.
So I want to leap onto this if I can. You're losing control. I'm sorry, but I can't. I have to, pile on to what was just said because you're right that there's a group that don't want to have anything to do with the government. They don't trust them. And I think governments and central banks need to earn the trust that they have. And so fair enough. And I also think that there's a whole group of people, as Brian said, that actually do trust, at least enough to realize that if they want to take advantage of a $22 trillion financial system, they're going to have to join it in some place or try to replace it entirely, which I think is a long shot. But I mean, the reality is even a decentralized stablecoin protocol like DAI or however you pronounce it is dependent on the stability of US dollar coin. So it's kind of hard to get away with some in a purely decentralized, or what people call a purely decentralized world, actually get away with some centralization in different spots. And so that's actually good news for the regulator because that's a way to get in, aside from the on-ramps and off-ramps. But it is a reality. And so, I mean, I think we should lean into that.
Yeah.
I also just want to add in, but when you said that, the traditional financial system is, 20 plus trillions of dollars, a lot of people had written off this asset class largely for the first 10 years of its existence. So Bitcoin comes out, January 3, 2009. So we're about 13 years in. And now it's not a small little player anymore. I mean, now it's $2 trillion in the tokens themselves. When you add up the valuations of the supporting infrastructure, it's probably closer to potentially 10. And so people, I think, improperly discount the exponential growth of how these things can proliferate and how quickly it can happen. If you look at the value of Bitcoin and Ether and all of these tokens in the kind of pre-pandemic era, and then you look at what happened kind of in that second half of 2020, there's just this explosion in interest, not just from the technologists and the people who were part of the community before that, but a new group of people who came to the table, the institutional investors and people who had written off the idea of software-based monetary policy. and they came to the table. So it is still a long way away from where the traditional financial system is in terms of asset valuation. But I don't think it's too hard to imagine that it can easily grow an order of magnitude or more from here.
Carolyn, Brian mentioned sort of the what may be resistance from the decentralized finance cryptocurrency world. I wonder how a CBDC would be thought of from the traditional finance side of the equation. When I hear of more efficiency in payments and that sort of thing, that sounds to me like a potential threat to the margins of the big financial companies of the world. Do you think they will embrace the idea of a CBDC, or is there sort of the potential for them to resist it because it can chip away at some of the functions they do and some of the profitable functions they perform for the financial industry?
So, I've talked to a number of financial institutions and about this, and what I hear are a couple of things. One is where you started, is what's the difference between me paying with my debit card out of my bank account and paying out of an account with the central bank. And then they do worry, I think, if you look at the amount of research that's going on about it, and what central banks have said, is that we need to think about the stability of bank deposits, because they're a cheap but stable source of funding. And so you don't want, in bad times, a really great place to run to that could create instability. And so in my mind, that's a question of central bank design, the distribution of it and how it's designed, whether there's an interest rate associated with it, whether or not it's distributed directly by the central bank, so you have an account with the central bank, or whether it's distributed in a two-tiered model through financial institutions or in another way. And so those kind of parameters make a really big difference to what it means for financial institutions. I would say, and with most respect for FIs, that contestability on market is actually not a bad thing. And so they can pay higher deposit rates. They can make sure that they're run well and their risks are managed, so they reduce their run risk. They can do a lot of things. They can also take that central bank digital currency and provide services on top of it. So it's not just a threat. In fact, I don't think it's a very big threat. I think it's more of an opportunity for them. And so, as central banks design this, it's really important, and I know this is what they're doing, for them to consult with not only people to say what kind of object would you use, but also with businesses and banks to find out where would be the pain points and where would be the bliss points in some pretty fundamental design issues.
Yeah, I think that higher deposit rates is a notion that would catch the interest of a lot of people, of the general public, just sitting on savings accounts yielding nothing. But Carolyn, could you sort of give us the state of play at the Bank of England, what the mood is towards CBDC? I get the impression that central banks in most developed countries, at least, are taking a very sort of methodical, slow and cautious approach to it, yet still an approach nonetheless. I'm just curious what the temperature is at the BOE for going forward with a CBDC, if they will at all.
Yeah, so I'm not here to actually speak for the Bank of England and my colleagues. I'm here to speak on behalf of what I think. So just take whatever I say in that light. And in fact, to make it easy on you, the BIS just published, I think it was last week, a report on the work that the group of central banks, including the Bank of England, have put out on where they're at with respect to central bank digital currency. And I think they're doing two streams. They're working through the policy issues, just like the ones we just talked about. What does it mean for banks? What does it mean for financial innovation? But also the design issues. And some central banks, including the Bank of Canada, Bank of England's been, looking at what would the technological options be about how to execute and achieve what we need, both from being able to handle the number of transactions required, the privacy issues, the issues with respect to, just like banknotes, you don't want it counterfeited, lots of aspects. they've put out, the Bank of England's put out, a statement saying it's not going to happen in the next couple of years, but we'll be ready to talk more about it after that. And so they're taking a very concerted and focused, but paced approach to it. I got asked by a senator last week when I appeared before the banking committee, shouldn't we hurry on this? And aren't we behind? And I don't think so. So I don't think we're behind, but I don't think we can afford to waste time. The thing is that given what's at stake for the reputations of central banks, for the system as a whole, the trust that we have in it, central banks need to take the time they need to do it right. There's maybe some room for error in proof of concepts, but not a lot.
Yeah. I would imagine a lot hinges on what the Federal Reserve decides to do, given the dollar's role globally. Is there sort of a wait and see approach, do you think, for some central banks to see what the US decides to do, given the dollar's important role globally?
I don't think any central bank feels they're tied to what the US does. But certainly what the US decides in terms of design, if they ever decide to issue one, would be really important with respect to interoperability. So that would be true with the ECB and other major currencies, not just the US dollar. The fact that China is already out there with their own digital version has raised issues about whether or not that could change payment patterns and allow capital to move in a way that it didn't before, evade sanctions, evade SWIFT, all those sorts of things. So I don't think it's just the US that matters in terms of what's happening, but of course they're very important.
Brian, when I think about some of the selling points of crypto, I often hear the notion that there are so many people around the world who do not have access to the financial system, the unbanked in emerging developing countries. And to me, it's a pretty compelling argument for crypto. But does the idea of a CBDC undermine that at all, do you think?
I mean, I don't think so. I think that we can bucket what we're talking about here into kind of two categories. One is the monetary policies and exposure to these assets in terms of price and exposure to that. And then there's also the innovation that's happening here, because there's more than just financial innovation that's happening. There's brand new industries being created. There's brand new use cases that just use crypto as kind of that underlying settlement layer, like the metaverse, like NFTs, things that may not be about stores of value and price speculation, more about building communities. When I think about something like an NFT, I think of it as a coordination tool to rally these kind of micro communities around a specific project, around a treasury, around some innovation intention that they may have. And it's very early. There's of course tons of stuff that I think is going to go to zero. In fact, I think almost all of it won't be around in 5 years. But what excites me is to see the community coordination around this new set of tooling. But that tooling needs to be underpinned by some type of settlement layer. And that settlement layer, in the case that I'm most focused on, is Ethereum. So when people talk about Ethereum, I don't think it's just an alternative to Bitcoin, something else to speculate on. To me, what's so exciting about Ethereum is this global settlement layer, is this thing that everyone can plug into for all sorts of activity, whether that is a central bank who wants to settle up with some other institution somewhere else in the world, whether it's stable coins moving across Ethereum, and then there's the NFTs and metaverse and DeFi activities. And so there's going to be this spectrum of things that take place on these new networks. That's what's so exciting. It's not just about one or the other. It's a whole host of activities that anyone can plug into, whether they're an institution or an individual. So your question around, have we helped the unbanked? Do the unbanked who live in other parts of the world that don't have access to banking infrastructure? I don't think that we've moved the needle in a meaningful way yet. And that's a harsh reality. I think it's something that inspired me when I first came to the space. It's something that I still think is very much important. A lot of the activity that's taken place is by people who already have access to banking infrastructure, in North America and Europe and Asia. And so I think that there's still a lot of work to be done to figure out how do you onboard those people. how do you give them access? So things like making wallets more accessible. Everyone in those parts of the world largely still has access to a mobile phone. They may not have a bank account, but they have a mobile phone. So do we have wallets that are good enough that they can download? Do we have transaction fees that are cheap enough for them to interact with these networks? Are there access points for them to convert local currencies into crypto, or have access to some stable coin or CBDC issued by another country? I mean, would the local governments even want them to be able to do that, to opt out of their national currencies that may have potentially irresponsible monetary policies? I don't think we know yet. I think we're still scratching the surface of this, but these are important discussions to have. And I think that the community, the crypto community, which I'm very much a part of, needs to constantly check and balance itself around how have we helped that group of people. We're excited about all the innovation that's happening around some of these other things, but one of the core value propositions is access, inclusion, and where are we at with that? And what do we need to do in the next 1 year, 2 years, or 5 years to ensure that a new group of people in the world who don't have access to traditional rails can participate in this new economy? So we don't have answers to this today, but it's a great question and something to be cognizant of from every point in the industry, whether it's the crypto side, whether it's the central banking side. It's something we're definitely needing to keep bringing up at the table.
Yeah, Carolyn, have you thought about that at all from the CBDC side of the equation? Because I think of some of the nations that have already introduced one, the Bahamas and Eastern Caribbean has a pilot program going on. And to me, I can see a sort of a stronger case to be made in countries like that, where you have a significant portion of the population who doesn't have a bank account. And especially in an area prone to natural disasters, or islands that are separated from the local bank branch. Does the case for a CBDC make more sense in a place like the Bahamas or the Caribbean, where it's sort of solving problems that we don't face in such as much of a degree in developed nations?
Well, clearly, access to bank accounts varies across the world, and so that's a function that a CBDC could provide, where you don't need a private bank or a commercial bank account to go about your business. And that financial inclusion aspect's really high. I'd say though that it's not just limited to those areas of the world. You look at Philadelphia, and they mandated that you had to accept cash for the very reason that the rate of the high rate of unbanked people. And so, and I would go back to what I said right at the beginning, is there's this fundamental question we need to ask, which is access to a safe and final medium of exchange, so like a banknote, the liability of a central bank, a public good, or isn't it? And if it's a public good, it doesn't really matter how many people are banked. It matters whether or not you want that out there as an option. Many people say, well, who would use it? Well, it doesn't, as long as some people use it, it's fine, because we all have different cards in our account, different means of payments in our account. Some we use a lot, some we use very little, but we like to have those options. Those options keep other players in check. I can't help myself but just say, I loved how Brian just characterized this world where, we tend to fixate on Bitcoin, and it's kind of a hot topic. So of course it's like moth to a flame. But this crypto world, and the way he described it to me in my economist brain, is he's saying that different crypto assets provide different economic services. And so we can't put them all in the same bucket. They're not all securities. They're not all speculative assets. Some, and he's making the case for Ether, provides a service that is the underpinning of an entire financial ecosystem. That's a utility in some sort of sense. You could think of it that way. And so from a central banker's point of view, from a regulator's point of view, we need to be conscious of what those things are, even conscious of the fact that they could change over time as this evolves. And our regulations need to be attuned to that. If we try to, put it all in the same bucket and regulate it the same way, we're gonna make mistakes that might be costly for, at least in terms of the potential benefit we could get. So that way of thinking about it, putting CBDC in a bucket, it's not crypto, but how it fills out the full range of financial services is a really interesting and I think constructive way to look at it.
And one thing I just want to add into this, one thing that's kind of a funny way of looking at the space and how things have shaped up is, let's go back and try and imagine what activities would have been deemed illegal and not approved by a regulator or a government should they have been proposed from the outset. So Bitcoin, that most people would argue now is a commodity, in the very early days when you had one person or a small group of people writing a white paper and mining it themselves and maintaining the network, maybe that was a security, in the very first few weeks or months or years. I don't know, but I think you could make an argument that it was, and that over time it became a commodity. Ethereum itself is probably a securities offering during its ICO, and then it grew into this large global network and has shifted into probably being a commodity. I would argue that it's a commodity. Some of the lending platforms that may have been offside in the early days also might not have been approved. But now we look back and go, well, there's a ton of innovation that came and a ton of opportunity around those things coming out of the gate. Now, what concerns me the most is if we freeze this innovation with what we have today and say, okay, well, we already have the lending platforms and we have Ethereum. And so now we need to push everything into these regulatory boxes to make sure that they're compliant on a global stage in specific jurisdictions. What other innovations are we limiting? Like, why would we assume that the buck stops here? So balancing these things is very important. It's something I'm very passionate about because it's easy to measure, kind of what we have today and what we're preventing, but it's hard to measure what are we not allowing to proliferate or to be experimented with, because we're going to limit users on the network from being able to try new things. And to Carolyn's point earlier, she talks about this system called Maker that gives rise to a decentralized stablecoin. I'm a big fan of Maker. I think it's a really interesting project. For anyone who's not familiar with this, you can essentially lock up various crypto-related assets and potentially securitize or tokenize real world assets and use that as kind of a basket to back this stable coin called DAI that's a soft peg to the US dollar. It's a really interesting project. And one of the things that I think about is it doesn't matter that much to me if it works, if it doesn't, or if it breaks, or if there's some hack or theft or blow up, because the community will rally around what went wrong and how do we close that loophole. But if we prevent those things from even getting out of the gate and being able to try that experimentation, we'll never get to the net benefit for society at large. Because if there are better systems and ways of doing some of these activities, I think a lot of that innovation is going to come from these open and composable bottom-up community-driven platforms.
Carolyn, I'd love to hear you sort of react to what Brian was saying. I mean, that point about innovation in the digital asset space is so fast and furious. I in a way, I feel sorry for regulators trying to keep up with it all.
Same.
And the ethos is very much, move fast and break things, ask forgiveness, don't ask permission. And the result is some very, very fascinating, innovative projects that perhaps never would have come to fruition if you did have to apply, with the regulator for each step along the way. How do you view sort of that tension between innovation and regulation? Is it okay, do you think, to let guys like Brian, sort of come up with this new stuff? And
hold on, I never built any of the things. I wasn't the one outside. I just watch it from the sidelines and read about it.
Are we going to subpoena Brian? Is the question? No, but there's that tension there between innovation that is so far ahead of regulators and sort of nothing in the books to stop someone from, say, a synthetic equities trading on a blockchain, that sort of thing, or there doesn't appear to be. But then after it's created, then you have regulators weighing in and sort of coming in late and shutting projects down or threatening to shut down, say, a lending product, and that sort of thing. How do you sort of think about that from a central banker's perspective? How do you allow this really interesting innovation and not get in the way of it, but still protect the users of all this stuff?
So regulators will talk about, proportionate regulation. So it's proportionate to the risk. And I wrote something today that's in the Financial Post, an op-ed that talks about proportionate regulation. Of course, it's the shorthand. And so what people want to know is, what the heck does that mean? And it probably means something different for different regulators. In my mind, you can't step on innovation, whether it's in financial services or anywhere else, without a good reason. And good reasons for me relate to, at the individual level, appropriateness and the right transparency in protection for consumers and investors, individual consumers and investors who are going into this. Those are table stakes. And if your business model isn't up for doing that, then you don't have a good business model. Table stakes are also, money laundering, crime, that sort of thing. Well, it's just kind of no one else is allowed to do it or shouldn't be allowed to do it. We try hard with some failures, obviously, to manage that. That's there too. After that, and I think this comes up with what the Bank of England wrote about stable coins. The Financial Stability Board just came out today with something. It's about financial system risk that's a systemic level. And the reason it's so important to keep an eye out on innovations that could result in systemic risk is that it's not just the innovator and the investor's money at stake when that happens. It's the taxpayers' money at stake. And we saw that in 2008, 2009 with great innovations on the securitization space, among other things, create a disaster. And it's not just everybody who pays. It's usually the people who can least afford it, because they're the ones who lose their job and don't get them back. And so these things, when it comes to a systemic level, mean that they need to be regulated in a way that manages those systemic risks. And so if they're in everything but name a bank, like a stable coin that really looks like a narrow bank, well, it's a narrow bank. If it looks like a money payment service, like any other payment service, well, then it is. And there are basic risks that need to be managed. And I think that once you get to a systemic level, if your business model isn't up for regulation that's sensible, and not all regulation is sensible, got to admit that, then, or works as we intended, we always think it's sensible, but sometimes it turns out it isn't, well, then the business model is no good. And just like everybody else, it's going to go the way of the dinosaurs. So I think it's about drawing lines, allowing for some failures, but once they get to the point where you can lie to people and steal their money, or you can, and I say that, which makes I don't want you to think that I believe the whole system's like that. I think there are a lot of law-abiding, well-intentioned innovators who are out there trying to challenge the traditional system, and you got to like that. That's what makes us thrive. That's what helps prosperity. And so the question is, if it's not got guardrails, to me, it doesn't actually help the innovators. Brian can talk to this in this creative destruction lab at Rotman. A lot of the questions are about, gosh, I don't know the regulatory environment, and that's actually making it hard for me to sell my salad. It's hard for me to know where my risks are, or if my business model is going to, serve the test of time. And so regulations can actually help innovation as well, as long as they're sensible.
Brian, I'd love to hear your thoughts on that. We are getting some good questions in on the chat here. So reminder, if you have a question, drop it in, and we'll get to those at the end, because we got some good ones here I want to get to. But Brian, quickly, how do you as an investor in this space view regulatory risk? When you're looking at perhaps buying something that might come back to haunt you if regulators come out against it. Is that a big part of your thought process when you're sort of shopping for assets to buy?
No, and in fact, I think that a lot of investors, and maybe this is the argument for more regulation, are looking for things more on the fringe than the blue chip crypto assets like Bitcoin and Ether. Some of those assets I probably don't think are appropriate for new investors to throw all their money at. But I think my biggest concern around regulation is kind of two things. The first is we need clarification ASAP. There's businesses in all sorts of jurisdictions that don't know which activities are appropriate for them to offer out to retail investors. The space is moving so fast. Now we have things like DeFi and NFTs, and people want to do lending and staking, the ability to generate a yield off some of these assets. And the platforms don't know if they can offer it out to their customers, and they're competing against foreign players who maybe are willing to take more risk and just offer it out and capture that market share. So I think it's very important that we clarify how we're going to bucket these assets, where it's appropriate to offer to retail investors, what the structure of those products would look like ASAP to let businesses flourish. For me in Canada, I'd love to see Canada lean into this technology because there's clearly something happening here that's very special. My concern, on the other hand, is that if we overregulate and we try and box too many things into these centralized systems as access points into the wider ecosystem, that we risk bifurcating the space. And if I'm being really candid here, I think that we are going to bifurcate the space and that there's going to be two worlds. There's going to be the regulated access point boxes that can only interact with other regulated entities for any of these services. And then there is going to be more of the Wild West where a lot of the innovation happens. And the risk to us as a country, to people who want to see these businesses build, is that the development activity is not going to stop. Right? Whether it's in our jurisdiction or not, and we push it away and say, we don't want it here. We don't want these bad actors or the people who are potentially offside. We don't want any of that activity here. We can do that, but the innovation is just going to go elsewhere. There's going to be regulatory arbitrage opportunities here. More and more people will be anonymous and living on Discord and building pieces of software. And this is going to be really tricky because as there's things in that world that people want to access and participate in, how do we give them an access point that's appropriate if we too heavily regulate the local access points and platforms? I don't know the answers to these things, but these are really important discussions because my high level here is I would really hate in 10 years for us to look back as a country, and sorry, I'm just speaking about Canada here because that's where I'm based, even though I'm technically in Denver right now. I would hate to look back in 10 years and say, what a missed opportunity. The birth of a new asset class, a new financial system, a new backbone of the internet was created. In fact, it was largely developed, Ethereum in Toronto, in Canada. There's a lot of incredible developers in Canada. Why did we not play a pivotal role in its success and have those businesses based there and those developers living in our country? That is something that is very important to me, that we ensure that we have a piece and a place in that new economy and we don't push it away because of overregulation.
Well, I hope you brought some skis with you there to Denver, Brian.
I don't like the outdoors in the cold that much. Trust me, I didn't.
But I do want to get to the questions in the chat because there's some good ones and the timing is perfect because I'm out of good questions myself. So let's get to the chat here. One really important question, I think it's been asked a bunch, but I think it's worth asking it every day. Anonymous attendee asks, are we at the point of undue systemic risk via crypto? Carolyn, I'd love to hear your thoughts on that.
I think that, where the regulators are at, the FSB just said it, Bank of England, my committee just said something in the fall, in December, that we're at, we're not at the point where we would say there's systemic risk that today, that's based on looking at how big is it, how is it integrated with the rest of the financial system, either financial institutions or payment systems. What are the exposures with corporations and individuals? If you look at that, even though it's growing like crazy, it's not yet at that point. Nonetheless, that doesn't really matter because we can see the trajectory. It's growing so fast, especially the inroads with the rest of the financial system, and the fact that it's becoming more normal. People's retirement funds are being put in crypto, for goodness sake. And so the pressure is really on, and to get ahead of it or try to stay ahead of it, because it will be, and maybe not too long from now. So I think regulators have woken up, and hindsight's 2020, but maybe some of us would have liked to have done this a little bit earlier, but here we are, and I think that there's a lot of momentum now internationally and in different jurisdictions that I'm aware of to really try to bring the right regulations so that this vulnerability doesn't grow to a point where all the horses have left the barn, if I can use that expression.
Sure. Another good one, Gary Melnick asks, and this might be best for you, Carolyn, how important would it be to build a CBDC on a common platform that all global central banks would utilize? I might pile on top of that and say, would that be something, similar to SWIFT or on top of SWIFT or something completely different? You know, how would you think about the sort of coordination of global central banks with CBDCs?
So the Bank for International Settlements has which is the central bank of central banks, has taken a leadership role in, I think, in terms of coalescing central banks into thinking about these design issues. I think the more that if it's not the same platform, it has to be interoperable. Otherwise, we're not going to get the benefits. There may be jurisdictional reasons why countries wouldn't want to share platforms with other countries. Geopolitical issues would come into play for sure, as well as policy differences. So some central banks say, well, yeah, we would want to put an interest rate on this, and in fact, maybe use it as a monetary policy tool. And others are saying, nope, it's not what we want. So to get full compatibility or full alignment might be difficult to achieve, but certainly at a minimum, enough interoperability to allow the efficiencies in the payments would be fantastic.
And just to jump in here, I mean, this is one of the reasons I look at something like Ethereum as a very important piece of the internet, because it is politically neutral. It's not being run by a corporation or any specific jurisdiction. It's common infrastructure. That's what it is. At its core, it's a global settlement layer that has a common language that anyone who wants to plug in, they can use Solidity to write their code, their smart contract, and interact with one another without needing to trust one another. When I strip away, what is a blockchain, and someone asked, or you asked earlier, would a central bank build on top of a blockchain versus some other server infrastructure? I mean, blockchains are basically coordination mechanisms for two parties that don't trust one another. That's it. That's what this is at its core. So there may be a role to play on this open infrastructure to facilitate those types of interactions. As Carolyn's saying, there may be some members from different jurisdictions who can coordinate on what the tooling is or what the infrastructure is around how they would build their central bank digital currency. And then there may be some who want to take a different approach. And the question is, how do you plug those two in, to have interoperability? And maybe that does happen through something like Ethereum, where they just use a global settlement layer, and then they'll have to address how the privacy would be maintained, and the state of those accounts wouldn't be able to be viewed by third parties. But that's what's really exciting to me about this open common infrastructure, right? This is the internet, and versus an intranet, which is private and people having to ask permission to interact with it. The thing that made the internet so valuable was that it was open infrastructure for anyone to build, regardless of what some of the private corporations may have wanted to do in those very early days.
All right, Brian, a question in the chat, I think is tailor-made for you. In fact, I suspect maybe your mom or someone put this into the chat to lob you a little softball, but here goes. What is the problem cryptocurrencies were designed to solve? Why do we need more currencies?
So, cryptocurrencies are basically an alternative asset class. The first one, of course, was Bitcoin. And whether we all agree or don't agree if Bitcoin is a store of value, it is a monetary policy that, when it was created, it tried to mimic the best what Satoshi Nakamoto viewed as the best store of value in the world, which was gold. But the problem with gold is that it's physical and not digital. And so they wanted to see, can you replicate what gold is, but in a digital environment? So gold has these very specific properties, right? It can be extracted from the Earth's crust, roughly at a very predictable rate. We know that it's hardened. There's kind of a fixed supply of it, and that will ever be in circulation. When we get to it, we don't know. And so they tried to replicate that into a digital environment. And so Bitcoin comes out and says, let's just create a digital version of gold. In the early days, I think it did want to act as a payment mechanism for the internet, something that was more politically neutral, that would have less friction, less third-party reliance to facilitate those transactions. I don't personally think that Bitcoin is a good form of payment or a form of money. It's far too volatile, but that's my view. There's other members in the community who think it will be that. I don't know. We'll see where it goes. And so these are experimentations on how do we digitize kind of the existing systems and make it more democratic, make it more community driven. So it's not that it was trying to solve a specific, I need to get from point A to point B. It's trying to replicate a lot of what we have in the real world in a more digitally native environment that's less reliant on corporations and third parties. How successful it'll be, we'll see. I think that there's a lot of innovation that's come from these new worlds. There's a next wave of things that may not make sense to previous generations, like, my parents cannot grasp what the metaverse is or NFTs. And I even myself have a hard time some days wrapping my head around exactly what the metaverse is. And some days I go, seems a bit ridiculous, but it doesn't really matter. I mean, I think that the community and the wider group of people will decide if these things have value. And so that's what's really exciting here, is to see that these platforms give rise to all sorts of innovation. It's not that it's solving a specific problem, it's creating an entirely new ecosystem and economy to facilitate new things. The last point on this I would say is, if you think about the internet in kind of the mid 90s or the early 90s, and people said, well, what is this going to be used for? We see that there's pornography there and there's criminal activity there, but people don't need the internet in their everyday life. When I hear questions like this, I think about what would have validated the use case of the internet in those early days. Was it the post office coming out saying, you're going to be able to send a digital piece of mail, you can come into our location, you can use a terminal that we provide to you, and you can send digital mail to someone else? Or did that platform give rise to a whole new set of activities that were more respectful to the rails and the infrastructure and architecture that we couldn't have even imagined in the older world? And so things like social networking, no one ever would have predicted that would have happened. The idea that you would have access to the whole world's information seemed like this bizarre idea of, well, you could just look it up on the internet. If you asked someone in 1992 what that meant, they would go, what am I looking up? Who am I emailing? Who am I socially interacting with? So I think it's important to keep in mind, it's very hard to look, 10 steps forward as a way to validate why we should be excited about it today. And instead, I'm always pushing people to think about, is this new architecture? And if it is new architecture, what will that inspire from developers, from communities, from a global group of participants? And that's the thing to focus on. Follow the developers and the innovation that can come from that group.
Yeah, I think that makes a lot of sense when thinking about what the metaverse will become. Who knows? But
I don't know.
We'll know it when we see it. But okay, good one from Hassan Adil. For you, Carolyn, once CBDCs are in place, do we still need retail banks? Also, does that mean that CET and Basel ratios move to central banks versus retail banks?
So to the first part of the question, of course, we'll still need banks unless something else comes and provides a service that central banks likely have no intention of doing, which is helping intermediate with loans, for example, or providing banking services to commercial clients, participating in financial markets, among other things that private banks do. And so Basel Committee is actually quite interested in banking's move, or lack of move, but potential move into crypto by thinking about what kind of capital requirements would be required. The central banks have some capital, but given their ability to use their balance sheet in unlimited ways, that mean that in fact they don't need the capital the way that, and they've got the backing of the taxpayer, they don't need capital in the same way that private banks do. I think central banks that have credible monetary policies are able to do this. They've proven they've been able to do this. I wanted to just say one thing about what Brian said. A lot of what he says I agree with. I think when we look at this distributed kind of trustless world he's talking about, we'll move along faster if we recognize that in fact it's not completely trustless. And there are points where trust is actually required that aren't very transparent right now. For example, concentration of holdings of Bitcoin and evidence that I've seen of market manipulation means that those points of concentration, it's not distributed. The points of concentration in mining, where miners can do selfish mining, 51% attack, the coders who can wait 2 weeks before they tell you there's a problem with the code. These are all things that we just need to confront. It doesn't mean that all the benefits of DeFi and crypto aren't there, but just because you've solved the double spending problem doesn't mean you've solved the trust problem. And so that's what regulators, and I think regular citizens, should really be pushing for in terms of improving governance, improving just the guardrails that make sure that that system achieves its potential.
And just also to push back on this, Carolyn and I have talked about this before. You know what I'm about to say. You can easily argue, though, that, and I agree, by the way, that those issues do exist. I don't disagree with it. These are very hard problems to solve. But I pointed out when Carolyn and I were talking offline that the meat space world has these problems too. You have concentration of capital in with financial institutions with certain countries that over time have become more successful than the others. And one difference between these two worlds is there's at least, I would argue, far more transparency into these systems. We can see not necessarily where the mining concentration is in terms of geographic area, but we can see which pools, which groups of people have combined their efforts to try and maintain the chain. In the banking world, no one has any kind of purview into the state of accounts, into the state of how many loans are outstanding. And so it's far more opaque than what we have in the crypto world. It doesn't mean that it's perfect. And there's absolutely, she's right, that there can be bugs and there could be reasons that developers hold back on some information. But I think it's a step in the right direction to creating a more open and transparent system. The last point I'd make on this is, one of the things I always find funny is when I talk to lawyers or regulators about open banking, that a lot of them are very much in favor of, but then they're anti-crypto. I kind of chuckle to myself and think, aren't these kind of the same things? Just one is top down and the other is bottom up. We all agree that we want the future of whatever money is going to be in financial system exists to be more transparent, more democratic, have more participation from a wide array of users, transparency into who's creating the contracts and the products. And what that looks like or how we get there, I don't know. But I think that desire in the world is here. And the reason I'm so excited about crypto in particular, more so than open banking, is I just see a global group of developers who are seeing the same thing. And so it feels more mesh network-like. It's more self-composed, and that the transparency that's going to be offered there is just far greater than I think what we'll be able to see from private institutions.
All right. I don't know how much more time we have left. Maybe Ashley can play the Oscar music if we're going long.
Yeah,
but,
I think we're just over time here, so we'll probably wrap up.
Okay. Maybe if there's like a last question or comment or anything that you think is worth doing, and then we'll stop at 11:05.
Okay. Well, I'll just give you one last question then from the chat. Carolyn alluded to her hesitancy to recognize Bitcoin as a hedge for inflation. Would it be possible to provide some more insights in a review of Bitcoin or other deflationary cryptocurrencies as an inflation hedge? Thank you.
Sure. Well, really quick. Well, if you look at the correlations, some good work between Bitcoin and inflation. They're just not there to tell you it's a good hedge. I mean, you just look at the first few months of this year, you can see that. But if you roll it back, it's also the case. I think that commodities and some equities to some growth stocks are probably better hedges. That's not investment advice. That's just, just looking at the facts. And so for me, Bitcoin is a pure, it's a bet on the price continuing to appreciate because people believe it's going to appreciate. We know from previous bubbles, whether they're in real assets or in financial assets, that a big part of it isn't even the economic fundamentals, it's actually investor sentiment. So that can take it on the way up for a while, but we also know from history that sentiment can change. So the minute people think that Bitcoin is no longer worth anything and they do it in size, then that prophecy will probably be fulfilled.
Okay. Brian, I feel like as our host, you get the last word. Any reaction, any of that from Carolyn?
I mean, I don't disagree with Carolyn in terms of we'll see how it plays out and whether it's a hedge or not, I think remains to be seen. It may not currently have any type of correlation, or maybe it does have correlation to what we're seeing in equities or monetary policy. I think it's still very much a new asset class that investors globally are grappling with. Does it have a place in their portfolio? Is it an important asset? It does have some unique properties. It has a very transparent inflation schedule of what the minting schedule is of how much Bitcoin is in circulation. Is that valuable? I don't know. I'm not here to say definitively it is or it isn't. I think that investors are asking themselves that question, and we'll see over the next decade, kind of to Carolyn's point, does it find its footing? Does it have a place in society, or does it move away to other assets like Ethereum? I don't know, but I think that I wouldn't write it off so quickly and say for certain it will or won't fulfill a certain function in a portfolio or society at large. I'm watching it. I'm not as excited about it as I am Ethereum, but I haven't written it off quite yet.
All right, great stuff. I think that is all our time. Unfortunately, we didn't get to every question, so maybe we'll have to do this again someday and get to the rest of these questions. Really fascinating conversation. I thank you both for your time and the opportunity. Carolyn Wilkins and Brian Mosoff, really enjoyed it.
Thank you.